Ladies and gentlemen, buckle up, because Business Mind is here as we're about to delve into the eye of a financial storm, and Warren Buffett will be our guiding compass through the fog. The Oracle of Omaha, the billionaire investor extraordinaire, is sounding the alarm on the U.S. real estate market, and the warnings are nothing short of intense. Warren Buffett's concern: picture this: a colossal $1.4 trillion of debt looming over the real estate sector like a dark cloud. This isn't just a warning, it's a thunderous declaration from one of the most successful investors in history. Warren Buffett isn't one to cry wolf, and when he and his partner in financial wisdom, Charlie Munger, start waving the caution flag, it's time to pay attention. Why the concern? This mountain of debt isn't a mere statistic. It's a ticking time bomb, a potential catalyst for a financial earthquake that could shake the very foundations of the U.S. real estate market. The impacts are already rippling through the market, casting a shadow on the seemingly sturdy pillars of property. In the world of finance, Buffett's words are gospel, and right now he's telling us to brace for impact. The real estate storm is brewing, and the debt-driven thunder is getting louder. So, whether you're a seasoned investor or a first-time homebuyer, the time to heed Buffett's warning is now. The winds of financial change are blowing, and it's up to us to prepare for the real estate storm on the horizon. What does Charlie Munger think? Listen up, folks, because Charlie Munger, the straight-shooting partner of Warren Buffett, has honed in on a specific battleground within this looming real estate storm, the U.S. commercial property market. He's not mincing words. He's shouting from the financial rooftops about a potential crisis, and we need to pay attention. Munger's concern is laser-focused on the risky situation unfolding in the commercial property domain. Picture this: American banks, those financial bedrocks we often trust without a second thought, are wading through treacherous waters of bad loans. The very foundation of the financial system is creaking under the weight of a property market where prices are in free fall. It's not just about buildings and office spaces. It's about a domino effect that could send shockwaves through the entire economy. When banks struggle with bad loans, it's not just a problem for the suits on Wall Street, it's a problem for Main Street, for everyday folks like you and me. The fragility of the commercial property market is a red flag waving in the face of economic stability. Munger's intensity is palpable because he sees the danger in the numbers, in the downward spiral of property prices, and the ripple effect that could cascade through the economy like a financial avalanche. So here's the stark reality. We're not just talking about skyscrapers and business parks. We're talking about the very fabric of our financial system being tested, and Munger is telling us it's on shaky ground. The U.S. commercial property market is at the epicenter of this storm, and the thunder is getting louder. Brace yourselves, because it's not just a warning, it's a call to action in the face of a potential financial tempest. Commercial improperty, hold on tight, because the commercial real estate market is hurtling through a turbulent transformation, and the signs of impending financial tempest are glaring. We're not talking about a minor hiccup. We're on the precipice of significant losses that could reshape the very landscape of property ownership. Picture this as a financial tornado tearing through the commercial real estate skyline. The once sturdy buildings of investment portfolios are facing the whirlwind of economic upheaval. It's not just about the loss of value, it's about a fundamental shift in ownership dynamics. The crisis that looms over the commercial real estate sector isn't just a blip on the financial radar. It's a game changer. The titans of property ownership are bracing for impact, and there's a high likelihood of a dramatic reshuffling of the deck. The question is not whether change is coming, but rather who will be the new custodians of these towering assets. Prepare for a landscape where new individuals and entities emerge as the torchbearers of commercial real estate. It's a scenario where the old guard might see their empires crumble and new players step onto the stage. It's a seismic shift that goes beyond the balance sheets. It's about the very essence of property ownership undergoing a metamorphosis. So, if you're invested in this realm, or if you're eyeing that commercial property dream, understand that the storm clouds are gathering and the winds of change are blowing. The caretakers of these buildings are about to change, and the commercial real estate market, once a bastion of stability, is in the throes of a transformation that will reshape the skyline and the very foundations of property ownership. Warren's way of life. Here's a nugget of financial strategy from the playbook of Warren Buffett. The Oracle of Omaha has steered clear of heavy involvement in the commercial real estate game. And it's not just by chance. No, it's a deliberate move, a chess move, if you will, driven by a keen understanding of the tax implications that tip the scales in favor of individual investors over corporate behemoths like Berkshire Hathaway. You see, Buffett, the shrewd maestro of investments, knows when to dance and when to sit out. In the arena of commercial real estate, where the winds of crisis are howling, he's positioned Berkshire Hathaway strategically. The tax advantages that sway towards individual investors are a card in his hand, and he's played it wisely. While the storm clouds gather over the commercial real estate market, Berkshire Hathaway stands relatively unfazed. The traditional reluctance to dive deep into this particular financial sea wasn't just a preference, it was a calculated move. The tax implications that often weigh heavily on corporations in this space haven't cast a dark shadow over Buffett's conglomerate. So, as the crisis rages and property ownership undergoes a metamorphosis, Berkshire Hathaway, under the stewardship of Warren Buffett, is positioned with a certain immunity. It's a strategic dance that echoes Buffett's philosophy, avoiding the pitfalls others may stumble upon. While others brace for impact, Berkshire Hathaway's operations are likely to weather the storm with a resilience rooted in strategic decision-making. It's a lesson in financial acumen from the sage of investments, reminding us that sometimes the best move is the one you don't make. How did this happen? The United States real estate market has flourished on the back of accessible debt, riding the wave of historically low interest rates. The allure of cheap borrowing costs has not only fueled the dreams of individual homeowners, but has also been the lifeblood of ambitious real estate investments. With interest rates at historic lows, the environment has been ripe for borrowing, facilitating increased investment and development. This financial landscape has not only empowered homebuyers with affordable mortgage options, but has also incentivized large-scale commercial ventures. However, the very foundation of this prosperity now stands on the precipice, as warnings from financial giants like Warren Buffett signal potential storms ahead, questioning the sustainability of this debt-driven real estate boom. What can you do? As interest rates climb, the landscape of property ownership becomes a battlefield, and managing property debt transforms into a formidable challenge. The dynamics of commercial real estate financing, however, hold a strategic secret: non-recourse debt. In this financial chess game, property owners navigate a unique avenue where they bear no personal responsibility for the loan. It's a bold move. If the tides turn and foreclosure becomes inevitable, the bank, not the property owner, shoulders the burden of losses. Non-recourse debt is a financial shield, a calculated risk that allows property owners to play the real estate game without exposing their personal assets to the whims of market volatility. As interest rates rise, this strategy becomes not just a choice, but a savvy maneuver to navigate the treacherous waters of property financing, shielding owners from the full impact of potential financial storms. And there you have it. We've explored knowledge and insights from the wise and wealthy Warren Buffett. Remember, it all starts with a business mind, the kind that dares to dream big and strives to achieve even bigger. So check out the description below for the thing that could help you do just that. And if you're ready to turn dreams to achievements, don't hesitate to like, subscribe, and hit that notification bell right here on Business Mind. Stay connected, for more insightful content that empowers you to take your business journey to new heights. So go ahead, dream big, work hard, and watch as your efforts translate into success beyond your wildest expectations. This is Business Mind, reminding you that when you dream big, you truly can achieve bigger. Business Mind, signing off.